Now we're going to cover some of the key metrics you need to be aware of as a dividend investor, starting off with the key dates surrounding dividend stocks. First, we have the declaration date. This is the date when the board of directors announces an upcoming dividend payment. In that announcement, they're also going to be sharing at least two other dates. That is the record date and the payment date. Now, the record date or date of record is the date the company uses to determine who will be receiving the dividend payment. Now, to make things a bit simpler, there's also something called the ex-dividend date, which is normally one business day before the record date. The ex-dividend date is the cutoff date for determining who will receive the dividend. If you buy a stock the day before the ex-dividend date, you will receive the upcoming dividend payment. However, if you buy a dividend stock on the ex-dividend date or any time afterwards, the seller is going to be the one who receives the dividend payment. So really, the ex-dividend date is the most important and the one that you really want to pay attention to as a dividend investor. And finally, we have the payment date. This is the date that the checks will be mailed out, or in most cases, the cash will be deposited to the brokerage accounts. The reason why this is so specific is because some people will try to follow more advanced strategies, like the dividend capture strategy, where you try to buy a stock right before they pay a dividend, you collect that dividend, and then you sell that stock and ideally make a small profit. However, in this day and age especially, the stock market is extremely efficient, and dividend payments normally get priced into the share price, so you're better off to just follow a longer term strategy instead of trying to make short-term trades like that.